Sunday, the 25th of January, 2009. This is Brian Shannon from alphatrends.net. Let's go ahead and take a look at these markets real quick, and then I'm going to go ahead and look at some opportunities potentially that may be setting up for the week ahead, both on the long and short side. The consensus out there seems to be that, obviously we're in a bear market, and a lot of people are thinking that we'll break these lows from 20 at about 28, go down towards this level here at about 27 or so, and then go on to test the lows in the NASDAQ and also in the S&P 500. We'll look at that in a moment. That seems to be, like I said, the consensus. So we always have to be prepared for what if the market traps the majority of people and sets them up for a squeeze. I think getting above 29.60 might be where we would see a little bit more spirited buying from some short sellers who are caught the wrong way here. I'm not suggesting we're set up bullishly. I'm just trying to set up the other side of the coin, which is that we don't break down and perhaps we rally. So I think 29.60 or so would be the level to watch for a potential upside move to develop from. And on the S&P 500, obviously we remain in a bear market here as well. This chart just looks like death in here and looks like it's probably headed towards 75. And again, that's the consensus out there. I think there's nothing here to suggest that there's anything bullish going on with this market. Here we've seen though the last week that about the 80.5 level, 80.45 really, breaking below 85, that would set us up for that further downside test. But if we were to get back above about 84 or so, maybe 84.20, then I think that puts this 86 level into contention, and that's the bigger level, that if we can get above that somehow, then this will have been just a big bear trap. Now this is only a potential scenario. If we get above 84 and then 86, then possibly this market could get going. So 84.25, then 86 are bigger levels of resistance. This is more of a secondary resistance level at 84.25, and the more important level will be found at 86. Getting back above there, I think a lot of people are going to be caught flat-footed here. So we're in a volatile environment. Maybe this market's trying to make a bottom. I'm not going to guess. I just want to be prepared for what if we move higher. What are the stocks that may continue to move? Last week I pointed out BEAV. It never met the entry criteria that I was looking for, but the stock did hold above this prior level of resistance I was mentioning. We've still got a rising we've got the 10 above the 20 above the 50 on this daily moving average. Last week we were looking for a move above I'd forgotten what the level was, but I think right now you really need to see this stock get above probably about 9.5 or so. If it can clear this $9.5 level, then I think that this stock has the potential to continue, maybe even up towards the $11 level that it had briefly seen intraday up over there. But if we take a look at that 30-minute time frame, we saw that, let's take a look at the 10-minute actually. We saw a little shakeout on Friday on some heavier volume in here, and the stock was able to recover. So short term, we've got a little bit of resistance at about $9.30, but I think the bigger level it needs to take out is $9.50. If you're going to get involved in a stock like this, I think right now the worst case stop would probably go below here, and you only want to buy these as they show some momentum. Right now the momentum isn't there, so do not purchase. Don't send me an email and say, hey, terrible pick. You have to see, if it can develop some momentum, and then you want to obviously raise your stop, maybe instead of at this level above this high or this low rather. And if it can create, let's say this is the resistance where it's at. This is 9.5. Let's say let's see if we can, this is about where we are. Let's say ideally it could come up to that level, pull back to about 940, break out, and then we want to see it develop like this and keep raising our stops under these higher lows and sell into strength as it approaches the next potential level of resistance. So keep BEAV on your list to watch for a potential long. I think you also want to look at Sienna, like all of these stocks are still in longer term bear markets. So don't get too excited about the upside. These are not investments, they're potential trades. Sienna got moving a little bit on Friday. You can see that here on the 30-minute time frame. I think you want to see this stock pull back towards about $9.40 or so. Maybe this 5-day moving average comes up to it. So probably not on Monday, but maybe Tuesday or Wednesday. And then if it can get going, again, set your stop underneath it, underneath the most recent higher low rather. So if it comes down something like this, creates a low, and when you buy it on some momentum, put your stop and keep raising it higher. Let the market tell you where to get out. It's up to the market to tell us, but perhaps we could see the stock back up towards this $9 level, and obviously that would make a nice trade. Oil, let's take a look at USO first, the proxy for oil, crude. That is, USO had a big day on Friday. It's still in a horrible downtrend, but perhaps is heading up towards that 50-day moving average. We'll take a look at the 5-minute time frame. You see where it took out that $31 level, and then, but if it can pull back, oil may pull back down a little bit further towards 31 or so, but it looks like it's on its way. You want to protect any upside gains you have in there right now, but the oil service stocks, OIH, broke past a little bit of resistance here, and this group may continue to get going. So you want to keep your eye on the OIH and also the XLE, which is the another energy spider, and basically the XLE. They still look horrible in here, but if you can look at these shorter term time frames and look at these trends developing where resistance becoming support, rising 5-day moving average, perhaps we're going to see a move up towards 50 in the XLE, which would be a great trade. And if you want to get a little bang for your buck, then you trade the ERX, which is the Direxion Shares Energy ETF, which is basically as close as you're going to get to that XLE with 3 times leverage. So similar setup in here as the XLE. That is that maybe this stock could move up towards that $41 level. Obviously you're going to get more percentage movement. Still though, the daily time frame on the XLE pretty much more neutral than anything, but because of the overall strength in the USO, the crude, that is, perhaps we can see a little bit more. I'm going to post a few more charts to the bonus tab on the technicalanalysisbook.com with some of the individual energy companies that look more interesting to me. A speculative stock, last week I put speculative, a couple low price speculative stocks on. Those were Geron and STEM, and these stocks just exploded the upside. Hopefully you got some of those. So I like to look at some of these speculative stocks once in a while, the lower price ones like Metallico here. Metallico, another stock obviously that's just been beaten way down in here. The daily time frame setting up pretty nicely in here for a bounce only. Here on the 30-minute time frame, perhaps it's going to take a move up beyond $2.70, and then maybe it gets going up towards this level. If you get involved in this stock, I'd say absolute worst case stop goes under here. Hopefully it can just consolidate there a little bit, and you can put your stop maybe 10-15 cents away and get a real nice percentage move higher. NIHD, also another horrible, like all of these, horrible looking stock. Potentially it's going to, not hold this 50-day moving average in here, but it seems to be holding around that 50-day moving average right now. And, these aren't trend alignment stocks. These are just potential trades. We're seeing this pattern of higher lows in here. We're seeing this pattern of resistance becoming support right now. And if this stock can, start moving higher again, let's say from right here, or maybe it takes out the $20 level, I'd say worst case stop right around this level. It's got a nice tight range in here. We've got these higher lows. We've got a 5-day moving average starting to move higher. Maybe it's going to head back up towards this level where it gapped down from at about 22.5. Again, a nice percentage move if it can do it. Also, we've got ROC, another very speculative, broken stock like all of them, but perhaps due for a bounce in here, only because these 30-minute time, the 30-minute time frame looks halfway decent. Let's take a look at the hourly. Actually, you can see here that it just recently broke below this $8 level, which had been some support, and now it's acting as resistance. The thing is, though, this $8 level, and it's more probably about $8.20. If it gets above $8.20, then perhaps these sellers in here is going to turn into a little bit of a bear trap. We've got some higher lows. I'd say worst case stop under this 5-day moving average in these recent lows here at about $7.75. So maybe 45 cents risk. And if this thing gets going, maybe it gets up towards 10.5, maybe $11 a share. So there could be a good risk reward. I've looked, and I'm not sure if this company is due to report. I forgot to check this one, but make sure, especially if you're going to decide to hold any of these overnight, that you check when to see their earnings reports are due for these companies. You do not want to hold them in front of earnings. Whole Foods, WFMI, this stock has just been beaten down basically for the last 4 years in here, 3.5 years rather, and it's down to these lows from a decade ago, like a lot of stocks are, but it's holding above this prior level of resistance. It broke past on some heavier volume. It's holding up above there. We've got a 10 above a 20 above a 50-day moving average, so perhaps this stock can get going. It's tough to say exactly where the trigger for for upside momentum will come, but maybe about 1155, 1160, somewhere in there. I think at this point, worst case stop right on in here. This may be another day in here to see that 5-day moving average flatten out. Then it takes out the resistance. That would be nice. Then perhaps it heads up towards that $13 level, $1.50. I mean, that's a 10% move. And if your stop is 30, 40, 50 cents away, then you've got a nice risk reward ratio. And this stock has been acting pretty good around this 5-day moving average, so keep an eye on this one as well. Let's look at the short side now. ALXN. A lot of these pharmaceutical plays actually look like they're about to potentially have some bigger breakdowns. Look at this, monthly time frame, the weekly. You can see it's looking like it just, bearish flag in here, but it keeps grinding higher. We're up, below this 200-day moving average. We've got these higher lows in here, so perhaps it's going to need to break down on the daily time frame below about that 35.5 level for the momentum to really kick into the downside. But this is one you just want to keep an eye on in here. Perhaps you can short a little bit below this level. You can see that we've got a pattern of lower highs and lower lows here on the 10-minute time frame. That 5-day moving average is starting to flatten out. So maybe it breaks down, tests that 35.5, and then really, from the 35.5 level, if it can break that, then there could be a bigger downside. CELG does report earnings this week, and if you're looking to really just make a bet, basically, maybe you buy some put options on this thing, February 50s or February 45s, which would give you about 4 weeks or so of trading. They're trading at about $1.10, I think I saw. So the stock would have to go down to 43.90 to be intrinsically in the money, but perhaps you get a big break on this thing. Very speculative, but I think they announced something negative over here, and it just looks like it's hanging on the verge of this bigger break. So if it gets below that 46 level, 46, 45 and a half, then maybe this thing could really just fall apart. Very speculative though. FLIR, FLIR, I have mentioned this one a couple times recently on the weekly time frame. Looks like a perfect head and shoulders top in here developed, and we're basically right at the right shoulder. So maybe longer term short sellers, if you see something fundamentally negative about this company, you could get involved here. The 30-minute time frame, I think worst case stop probably goes right up around here. Maybe getting below this low, which when you look at a 10-minute time frame is at about 27.70. I think below 27.70 maybe you sell it short with a stop worst case right up around this 28.60 or so. And if this stock starts moving lower, then perhaps it comes down towards this 24 level or so. The weekly and daily time frame are all set up pretty negatively, so that's a good one to watch, as is FSYS, Fuel Systems. This stock, I was debating whether to put it on just because it's kind of grinding lower, but I did decide to because this support in here has been acting as resistance. We've got a declining 5-day moving average. So if you get in a stock like this one, absolute worst case stop goes up around that 28.5 level on FSYS, and maybe breaking back below this level here at about 27.20 or so. Also, another pharmaceutical is PRGO, PRGO. This one, I've mentioned this one. It hasn't broken yet, but it seems like each week it just gets closer and closer towards a bigger drop down towards this level. On the daily time frame, you can see that it's kind of consolidating right above this level where it had bounced before, but it keeps coming. It rallied up to this prior support, This prior support acted as resistance. Now it's back down to the scene of the crime, basically. The more time support is tested, the more likely it is to fail. So this one looks like it's, worst case stop probably around that 5-day moving average, around 29.10 or so. And, I think even breaking below 28.75. You don't want to sell these, if this stock gaps down to 28.40, that's not what I mean by sell it short below. What you want to see is if it gaps down, you want to see a rally up, a lower high, and then short it as it begins to move lower in here. So let's say this is the stock. It breaks support, opens here. We want to see it rally up on lighter volume, and then as it starts to come down, we want to sell short right in here. Put our stop at that level, maybe 10-20 cents away, and then hopefully a pattern of lower highs and lower lows emerges for a company like PRGO. Also, I've mentioned previously is this FSYS, Psychiatric Solutions. We can see in here this support acting as resistance about a week and a half ago. On the weekly time frame, you can see this level has been broken, and when we back that up to a monthly time frame, we can see how big that level is. That this prior level of support on a monthly time frame, so 3 years worth of support basically, or not necessarily 3 years of support, but holding above that level for 3 years, now breaking below it. The bigger the top, usually the bigger the drop. So this one could be setting up for a bigger fall like a lot of these stocks have seen. It looks like it's just built this little ledge that it's looking to break down below. It's tough to say the exact precise level. We've seen a gap lower on Friday it recovered from. It did make a lower high, so I think your worst case stops are right around in here. Not sure when the earnings date are due on this, but maybe again back below 25 with a little momentum, you sell it short. Worst case stop up here. Maybe look out a few months on the horizon at some put options, because this is the type of stock that could get destroyed over the next 6 months. Teva Pharmaceuticals, another one. I didn't look for I'm not looking for weak pharmaceutical companies, but this one, got choppy in here as it was kind of transitioning. But now we've got a declining 40-week or 200-day moving average. This little support in here acting as resistance, kind of consolidating a little bit tighter and looking to me like it's ready to break down a little bit harder. Maybe it takes a move below this one, 41.20 type area. But here on the 30-minute time frame, you can see we broke this little intraday trend line. We can take a look at the average price since it broke down here. The average price, the VAWA, volume weighted average price over the last since this level right in here. Since here, so from this point forward, the average price was right here at about 42.30. So maybe if I can get back up towards 40, let's say it gaps, and here would be another nice scenario for an entry. This is kind of what it looks like. So let's say it gaps up to this level on Monday, maybe consolidates a little bit in there and starts breaking down below the daily VWAP. You could sell it short in there with a stop just above this level. So there's all different ways to enter these stocks. It's up to you to decide the best way, because the market's dynamic and your plan has to be as well. But these are just some of the candidates that look like they're on the verge of bigger movement, so you want to keep them on your radar, like VIVO or VIVO, which is Meridian Biosciences, another stock that's had this huge run that's grudgingly breaking down, and eventually they pick up the momentum back to the downside. You can see it broke down on a gap here, came up to that 10-day moving average on the 10-minute time frame. It's probably got to get at least back below this level. It's nice to see we've got a declining 5-day moving average. If it breaks below here, and let's say you get it short below 21.30, worst case stop probably right around here. And pay attention to these worst case stops, and when they break down, if it rallies back up towards that level, as soon as it starts breaking lower again, and I can't draw over there. So let's say let's say this is our entry. So let's say it breaks down, rallies back up on lighter volume to this level right here, which is 21.30 or so, and then it begins to break down. If we sell short here, there's no reason to keep our stop way up at this level where we had this trading basically right here. So this level is equal to this level. There's no reason to keep your stop way up here. Instead, as you get a little momentum on the downward move, keep your stop 20 cents away. Why give it 70 cents? That's just another 50 cents potentially that you're not going to, of extra risk that is a loss. And in this market, you've got to be prepared for anything, and you got to be prepared to move quickly because it's extremely volatile. I'll update these ideas later in the week, and hopefully some of them work well for you.